are you actually profitable? Or are you always just reinvesting your profits back into your company and never really making any money? Let me show you the way that I'm always profitable in my Amazon FBA business. And it's not even my idea. It's not even my process. It comes from a book called Profit First. It entirely changed the way that I run my business. And it's simply just a cash flow management system, all done just by opening the bank account on your phone or on your desktop and taking a quick glance at all of the money that you have allocated to very specific purposes in your business. But for this to work, two things have to happen. First, you have to separate your business expenses from your living expenses. The easiest way to do this is just to have a bank account for your business and have a separate bank account for your personal expenses. The second thing is you actually have to track your spend. You have to track how much money you're spending. You have to track the inventory that you're buying, also what it's selling for, because knowing how much each individual thing costs you and how much you sell it for is going to help you with this process. I have a video here on how you could track each individual product so that this actually works. And if you need to go get a business checking account, then go ahead and just open one over the weekend. For this profit first system to work, you have to understand a very few basic business terms. Those are cost of goods sold, income, profit, owner's compensation or owner's pay, taxes, and operating expenses. Let's start with the cost of goods sold. This just refers to the amount of money that you spent on inventory that actually sold. For example, let's say you sold 3 books on Amazon for $160, and after Amazon deducted their fees, they gave you a check for $130. Let's say those 3 books cost you $10 each. Well, your cost of goods sold would be $30 because you basically generated $160 of revenue by spending $30. Income is super simple. It's just going to be the amount of money you received from Amazon subtracted from the cost of goods sold. So in this example, if Amazon gave you a paycheck for $130 and it cost you $30 in goods to generate that $130 check that Amazon gave you, then your income is $100. Owner's compensation is just simply the amount of money that you pay yourself in the form of a salary. Taxes are the money that you have to pay the federal and state government for operating in this country and making money. And then lastly, your operating expenses are all the expenses you need to pay to keep your business running. Think about all the softwares that you need to keep it running. Think about employees. Think about the things that are necessary for the business to run. Those are operating expenses. And once you take your income and subtract all of those things, operating expenses, the taxes, what you actually pay yourself, whatever's left over is what we call profit. And that would be like the bonus a company pays to its shareholders for being an owner of the company. Is what the company actually made after taking away all of its expenses. Now, the reason why I think Profit First is so awesome is because most people calculate profit in the way that I just described. They basically take all of their expenses, subtract it from their income, and whatever's left over is what their profit is. In other words, your sales or your revenue minus your expenses is equal to your profit. But the whole point of Profit First is just to turn that formula around and instead focus on paying yourself first. And instead of revenue minus expenses equaling profit, what you should really do is take revenue or income and subtract profit so that you get expenses. In other words, the way to be profitable is just to always prioritize paying yourself first. It's prioritizing the way and how you allocate your income. The order I personally follow is to allocate my income first to profit, then to owner's compensation, then to tax, then to operating expenses, and then if I feel like reinvesting back into the business, finally back into cost of goods sold. So remember, to be profitable and to always be profitable, you have to prioritize paying yourself first. So with this $100 of income, we're going to prioritize ourselves and pay ourselves a 5% profit share. In other words, 5% of the first $100 of income is going to go into an account called profit. 5% of 100 is $5. So boom, $5 goes into that account. Doing this one simple action ensures that you're always profitable because the first money that gets allocated from your paycheck, from your income, goes right into profit. After I allocate 5% of my income to profit, the next 60% of that income I personally allocate towards my owner's pay or my owner's compensation. Basically, that's the salary that I'm willing to pay myself for being an employee in my business. It's completely different than profit because profit, again, is going to be a dividend that I pay myself at the end of the quarter. Since I'm the owner of my company, you better bet that I'm paying myself a salary. 60% of $100 is $60. So the next $60 after I paid myself the $5 profit goes into a separate account, which is called owner's compensation. And by the way, all these accounts that I'm talking about are going to be with one bank. They're going to be easily shown side by side when I log in with my bank And I'm basically going to see how much money I have for each specific allocation or each specific purpose. Once we've taken care of paying ourselves first through profit and also through owner's compensation, the next most important thing is we have to pay our taxes. I personally allocate 15% of my income to the tax account. So 15% of $100 is $15, and the next $15 goes right into a tax account. Now that we paid profit, owner's compensation, and tax, the next thing that we have to pay are the operating expenses, which is all the money that we need to operate and run the business. Think of all the subscriptions that you use for your Amazon business. For me, I use Be Cool, I use Flipmine, I use Keepa, I use Accelerlist, all the softwares that I need to run my business. To my operating expenses account, I allocate 15% of my income. Now, if you run the math real quick, you'll realize that that doesn't actually add up to 100%. There's actually 5% left over, and that 5% I reinvest back into my company through the cost of goods account. If I didn't explain it earlier, the cost of goods account is simply the money that's used specifically for the purpose of buying more inventory and no other reason. So in this way of me adding 5% of my income every single paycheck, I am actually continually reinvesting into my company because I'm spending more money on being able to buy inventory, which theoretically should make me more money. But I'm doing it at a sustainable rate. At this point, all of my income has actually been allocated, and my income account should actually say $0 because every single dollar has been allocated to a specific purpose. First, it went to profit, which is going to build up over time. At the end of the quarter, I'm going to take a dividend or disbursement for being a profitable business owner. The owner's compensation account is all about paying my salary. The taxes is about saving money for me to pay the federal and state government. And then finally, the operating expenses are there for me to pay on the things that I need to run my business. And lastly, the cost of goods account is there for me to know how much money I need to spend on inventory. The awesome thing about allocating your money in your business in this way is that with a quick glance, you can open up your banking app on your phone and just quickly look at the health of your business. You can figure out how much money do I have to spend on inventory, or how much money can I spend on a new software, or how much money do I have saved for taxes? Also, how much profit am I actually making? What is my dividend or my payout going to be at the end of this quarter? And lastly, probably most importantly, is do I have an owner's pay? Do I have an owner's compensation? Is my business actually doing what a business should do, and that is paying yourself money? Now, like I said, I know that this is a lot to take in. In order for this to work, two things, again, have to happen. One, you have to be tracking the inventory and the money you're spending on inventory and also what it's selling for. That in of itself is something that's very difficult to do in the beginning. Like I said, I have a video where I go over the spreadsheet that I use to do that, and you could just make a copy of that and you can use it on your own. And then second, you have to separate your business expenses from your personal expenses. If you have all these accounts right next to your personal checking account, it's going to be very easy to muddy the waters and move money between your personal and your business accounts. And that's not what you want to do. Now, there are some great resources out there that can make the allocation process super simple. And that's actually a profit first calculator that you can look at going to this website here. You can go ahead and put in your real numbers. Basically, you can put in the amount of money that you received as a paycheck from Amazon. Then you could subtract all of the cost of goods sold, which again would just be the amount of money you spent on inventory to generate this amount of money that's coming to you in this form of a paycheck. And once you have your real revenue, then you can go and start allocating, and you could be profitable every single month. You can take 5%, go to profit. You could take 60%, go to owner's compensation, then to taxes, then to operating expenses. And if you truly do want your business to grow sustainably, then you should leave a little extra left over so you can put that back into the cost of goods account so that your cost of goods sold account keeps increasing in value. In other words, the amount of money that you can spend on more profitable inventory goes up. All right, it's time for some FAQ. Question number one I get all the time is, do I need 5 separate bank accounts? The answer to that is yes and no. You only need to have one bank that you're working with, but with that bank, you need to have 5 to 6 separate accounts. For me, I have 6. I have cost of goods sold, I have income, I have my profit, my owner's compensation, my taxes, and my operating expenses. So I have 6 accounts with that one bank. Super simple. I just log into my banking app. I can see all 6 accounts side by side. I know at a quick glance how much money is in my owner's compensation, how much money is in my profit, taxes, and so on. Okay, question number 2. When do you pay yourself profit? Every single business that has shareholders or that is a publicly traded company that reports profits has the ability to pay profit or dividend to its shareholders at the end of every quarter. So what we want to do is not pretend. What we want to do is make sure that you are actually a profitable business. And in doing so, that you, in taking in this profit, actually give yourself a bonus, or you give yourself a profit or a dividend for being an owner of a company that is actually profitable, making money. So basically, the way that the profit payout works out is that at the end of every quarter, which would be 4 times a year, what I would do is take 50% of your profit account and give that to yourself as a bonus. And that money can be used for whatever you want. It's just a bonus. It's just a, hey, here's a great job for owning a profitable business, and you can use it on whatever you want. FAQ number 3 is, what exactly is owner's compensation? Owner's compensation is basically comparable to a salary. Pretend that you worked for a company and you were not the owner of the company. Presumably, you only work for the company because they pay you a salary. The point of it is for your business to actually provide a salary for you, which it should be doing, since the point of a business is to make money. FAQ number 4 is, how often do you do these allocations? How often do you take money from income and allocate them to each of these different buckets? That's completely up to you. I'm an Amazon FBA seller, so personally I get a paycheck every 2 weeks. So every time I get a paycheck, I take the amount of money that came in, figured out what I spent to produce that amount of revenue, and then I subtract the two to get my real revenue. Basically, the amount of money I spent on the inventory to produce that amount of money just goes right back into the cost of goods sold account so that I can replenish how much money I had before to spend on inventory. And once I have that real revenue, which is simply the income minus the cost of goods, then I do my allocations right from there. So I do mine twice a month because I get paid every 2 weeks. FAQ number 5 is, how is operating expenses and cost of goods sold related, or how are they distinct from one another? Basically, they're two separate accounts because they're two specific things. Cost of goods sold is simply the amount of money that you spend on buying inventory, and that's it. Operating expenses is everything that you need in your business to get it to run. Think of all the softwares that you need to use. I'm an Amazon FBA seller, so I have to pay the Amazon Pro monthly subscription, $39.99. I have a repricer called Be Cool. I have FlipMine. I have Accelerlist. So I have all these different softwares that enable me to do my business faster. And those would be my operating expenses. FAQ number 6 is, when do you pay your taxes? When do you take money from the taxes account and pay your taxes? Well, if you're a business, then you should be paying your taxes every single quarter, which means that at the end of every quarter, you take the amount of money that's in that taxes bucket and you go pay your federal and your state income tax. And the beauty about this is that if you do this at the end of each quarter, then by the end of the year, when you file your taxes, your tax return should be pretty spot on in terms of you not needing to pay any more money because you've already allocated the amount of money you should be paying for your taxes. The next FAQ is, how do you figure out what your allocation should be? This really just comes down to you running the numbers. For me personally, what I had to do is look at the amount of money that Amazon gave me in the form of a paycheck. I had to figure out what I paid for those items to generate this amount of money that was coming to me. And from there, I had to go and calculate what my reoccurring monthly expenses are. Like, what are my operating expenses and so on. And when I did that, I quickly found out that, okay, there are certain allocations that I can make every single month so that I can, in fact, pay 5% profit, or I can pay 60% owner's compensation. For you, it's going to vary drastically depending on what your numbers look like. If you get a paycheck from Amazon that's $5,000, but it took you $4,000 to make that $5,000, then obviously your real revenue is going to be different, and therefore the amount of money you can allocate to profit and you can allocate to owner's compensation is going to be different. But one thing that I would say, and what the book tells you to do, is no matter what, always allocate the first 1% to profit, because if you do that, then technically you'll always be profitable. What do I spend my profit on? At the end of every quarter, I take 50% of my profit account and I pay to myself as a bonus. The question is, what do I spend that money on? Because it could be a pretty substantial amount of money depending on what you're doing or how much you're selling on Amazon. So for me, I like guilty pleasures. So growing up, I love Pokemon. So sometimes I'll buy, some Pokemon cards for some guilty pleasure. Most of the time, I just take that money and I just invest it in the S&P 500. But sometimes, I'll use it for other purchases that I might not necessarily do otherwise. But the point of the profit account is just to reward yourself for being an owner of a company that's actually making money, that's actually profitable. What if your allocations don't work? Like, let's say you pick 75% for owner's compensation and 10% for your operating expense. Let's pretend that it doesn't work out, and the end of the month, your owner's compensation account is zero, or your operating expenses account is zero. What that tells you is that you need to rerun the numbers. You need to recalibrate, and figure out what numbers could work for you. If you're finding that you have $0 left in your owner's compensation account, then what that means is you're not making enough money in your business, meaning you're not really profitable. Or what it could mean is that you're being unrealistic with how much money you can pay yourself with respect to how much money or how many products you're actually selling. What if your income is completely inconsistent and you get large paychecks during specific times of the year and then you get small paychecks during the other parts of the year? How do you allocate that? And also, how do you pay yourself from the owner's compensation account? Well, me, I sell mainly textbooks. And what that means is basically in January and August, which are the two textbook seasons, probably about 75% of my sales come during those 2 months, which means about 75% of my revenue and therefore my profit or how much money I make comes during those 2 months. So how do I pay myself a consistent or a reliable salary? The way that I did it was I just sat down at the beginning of the year and I just said, okay, what is the amount of money that I'd like my business to pay me as a salary every single month for this entire year? I personally chose $3,000. So I said, every 2 weeks when I get my Amazon paycheck, I want to pay myself $1,500 as an owner's compensation as a salary. And what that means is whenever I get large chunks of money or large checks from Amazon, I put it into the owner's compensation account. But at every 2 weeks, no matter how much money comes into that account, into my owner's compensation account, I always move the same amount to my personal checking account. So like I said, my goal is to make $3,000 every month. By the way, that's after tax profit, that's after tax income. So what I do is every 2 weeks, I take $1,500, regardless of how much money I actually put in during that pay cycle, and I go ahead and take that $1,500 and I transfer it over to my personal checking account. And what that has enabled me to do is to take a business that's very inconsistent in the amount of income it receives and pay myself a salary over the entire year. How do you actually set up the accounts at your bank? The way that I did it was really simple. I have a local credit union. I was actually able just to go online and add more accounts. So I was basically able to go add more savings accounts. I only had one account with this credit union. I just went online and just added 5 other accounts, and I was able to nickname them so that they have their specific titles. And that's how I did it. If you have a bank that's a bit larger, they might think that what you're doing is a bit odd. So they might at first ask you what you're doing, and you could simply just explain to them, my goal is to become a more profitable business so that we can have a better working relationship. This is what I need to be a better business person. I need these accounts. And I'm sure if you explain this system to them, they'll be more than happy to help you out. Is it really a bad thing to reinvest all of your money back into your business? Well, it's just up to you. If you always reinvest every dollar you make back into your business, yes, technically you could grow faster and faster, but if you do that indefinitely, you'll never make profit. You'll never make money. It's just a continuous cycle. You're like a hamster on a wheel that keeps reinvesting everything you make back in your company. And as a result, you never pay yourself any money. You never take a dividend. You never take profit. And I would argue that the whole point of being a business owner is to have the business pay you money. Like that's the reason why we want to be an entrepreneur. That's the reason why we want to own a business, is that we want it to make us money. So I'm not saying you shouldn't reinvest back into your business. What I'm saying is I think it's a good idea to first prioritize paying yourself first. And if you can come up with a healthy salary and you can be profitable, then figure out a way in terms of how much money you want to reinvest back into your business. For example, the way that I do it is at the end of my allocations, I have 5% left over, and I take that 5% of my income from that pay cycle and I reinvest it back into my business in the cost of goods sold account. And what this means is that at the end of every pay cycle, theoretically, my cost of goods sold account just increases in value, which means that every single pay cycle, I can spend even more money than I could previously on buying more inventory. Okay, lastly, the book is called Profit First. This is what it looks like. It's a great read. I'd highly recommend you check it out. It's going to explain in much greater detail than what I just explained, and I think it's going to help you out if you do implement this in your business. If you have any questions, leave them down below. And if you want to know how to source profitable books online through online arbitrage, check out this video here or this video here.